guidelines everywhere telling you to invest, buy stocks, buy gold, buy assets, save 15% of your salary, and also avoid tech stuff because AI bubble is about to burst. Sounds confusing, but the question is, what are you going to do? In this video, I'm going to be walking you through practical steps that have been tested and proven to produce results that are very positive. I'm KEFEE-LICENT and you're welcome to my channel, a community where we talk about money, investing, building wealth, and of course, our financial freedom. Please hit the subscription button if you haven't. Thank you so much for having done that. Don't forget to give us a thumbs up. It's very important to this video. Like, share, and also comment. So let's get started with the basics. What is investment? Investment is simply using your money to make more money. Allowing your money to make more money for you while you do little or nothing at the end of it. All you need to do, put the money there and then it will produce more results. And why do you need to invest? Let me explain that. Every year, inflation rises at different percentage. Now, this is it. If you keep your money in the bank, over time it is losing value. Take a practical example. You want to get a phone or you want to get a gadget, for instance. If you want to get this now, let's say you're getting it for $1,000 and you have that money right now in your account. If you keep that money there for another 1 year, before you know it, by that time, you will not be able to use that same amount of money, which is the $1,000, to buy that same gadget. It may have increased to 1,200, 1,300. Now, the increment there is what is known as inflation. So, simply put, you can say inflation is the rise in prices of commodities. It is as simple as A, B, C. Because of the inflation, when you just keep your money in the bank and just keep it somewhere without investing it, it begins to lose value over time. And that is why you must invest to be able to beat this inflation rate. The inflation rate differs. So when you invest, as inflation is coming up, your money is also making more money in percentage as well, multiplying itself. And by so doing, you are able to beat the inflation. The second reason is because it is the easiest way to compound your money, to compound your wealth, and of course to grow wealth. Take note, this is not a get-rich scheme. It is not a Ponzi scheme. I said over time, which means it takes time for this your money to begin to grow. Unlike when you just keep it at the bank or you just keep it somewhere, it doesn't grow. Instead of growing, it begins to lose value. It is no longer news that we are living in an economy where inflation is no longer news, yet assets always grow over time, like investing in businesses, buying properties. All of these things over time, they get to increase. So inflation doesn't really eat up to them. If you buy a property or you buy a share or you buy an asset, it increases over time. Someone who bought an asset years ago has probably seen the result, has probably made more money from that asset. But you cannot say same for salaries, because salaries, they've not actually been doing that much. They've not been increasing that much compared to what assets will give you. For some persons, the salaries have remained the same for over 5 years, 6 years, even 10 years. The second thing is stock. Stocks simply are a fraction of companies. Let's take for instance, you cannot buy the entire company, but when you buy a share, a particular unit of share, you are buying fractions of that company. Let's take for instance, you buy a share in Amazon. It simply means that you are now a part owner of Amazon. And then you want to ask, if I buy these stocks, what is my profit? How am I going to make profit from it? There are two different ways you can earn from the stock market. One is by the increment in prices. That is when the prices rises. Take for instance, you buy a particular share for $1, and then over time, this same share that you bought for $1 is now selling for $10. It means that you have made a profit of $9 per share. That is one of the ways that you can earn from the stock market. Another way that you can earn from the stock market is through dividends. What are dividends? Dividends are the profits made by the companies. Now, at the end of the day, at the end of the year, they decide, okay, we have made this particular profit and then we want to share it with everybody that has our shares, everybody that is our shareholder. So they share this money among those that have bought their shares. Depending on the company, there are some companies that pay dividends. Most companies actually pay dividends about 3 times a year, while others pay just once a year. Some don't even pay at all. There are some companies that would rather reinvest that profit because they want to grow, because they are still looking at the growth momentum. So when they make this profit, other than just sharing it, they reinvest it into the business. That way the business grows, and as the business is growing, your money is growing as well. So now that you know what investment is, why you should invest, what stocks are, and how to earn from the stock market, now that takes us to the next one, which is how to start investing. Now a lot of people will tell you invest, 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 but not everybody is telling you exactly how to invest and the problems that you are the challenges that you are likely to face. Of course, like every other business, even the stock investment also has its own ups and downs because the market is not constant. Take for instance, just like your everyday market, you could go to the market to buy some foodstuffs today, and then when you get to the market, it's a bit cheaper, and then you might go the next time and the prices may have increased, and then you go again and the prices has come down. So it fluctuates up and down. It is not constant. There is no constant movement that once you buy it will just begin to go up. No, it all depends on what the market is actually saying at that particular time. And don't forget there are different factors that also affect the market. A lot of people buy stocks, but there are things you need to understand before buying stocks. There are risks. Just like I said earlier, the market goes up and down. Even a big company, even those big companies that you're eyeing today might crash tomorrow. Let's take for instance, many years ago, we've heard of companies like BlackBerry. When BlackBerry was in charge, if you were using BlackBerry then, you would understand what it means to have a BlackBerry share. There are people that bought, some persons then bought BlackBerry shares for about $100, but today it is worth less than $3 end of market. So if you bought BlackBerry then because it was a big company, it was on top of its game, trust me, by now you will not exactly be enjoying your money. Instead, you would have run at a serious loss, especially if you're still holding on to it and refuse to sell it out. By now, you would have run into a lot of losses. So instead of buying individual stocks, instead of buying individual stocks, you can decide to go into index fund. Index fund is the safest, especially for beginners. As a beginner, you don't want to risk your money just putting it anywhere, buying just any shares, and then it's depreciating or the market is eating it up and you're losing your money. Because the aim of investing is for you to be able to grow your money, for your money to grow itself and work for you and multiply over time. So if you are to make sure that this is happening right, you also have to do things right. As a beginner, it is very risky. No doubt that some companies can do well and favor you, but it is risky. That is why I recommend that you start with index fund. Now, what are index funds? These are companies that tracks the records of other big companies. Let us take, for instance, we have the S&P 500. So what is it all about? Let's say, for instance, you buy a single share of S&P 500. You have successfully invested in 500 of the biggest US companies. How are you doing this? When you buy this S&P, even if you're buying just a unit, what they do is they take this money and they help you to invest it into 500 other companies. That way, even when one is crashing, of course, there is no way all 500 are going to crash and not at the same time. So even if one is crashing, there's always a replacement. There's always another one to fill up that space for you. So and that way, you are less at risk because your money is still working for you. There is no way all of these companies are going to run at loss at the same time. Definitely, just like the market goes, some increase in price, just like for instance, when foodstuffs are going up, groceries might be coming down, and when groceries are going up, foodstuffs might be coming down. It's just like that. So all the companies do not function at the same rate. They do not make exactly the same profit. So when some are going down, some are going up. And you could be lucky that everything is just going up at the same time. That way you're also making more money and your money is safer other than just buying one stock. So instead of owning just a company stock, you can decide to buy the S&P 500, for instance. There are other index funds. This is just an example. If you want more, you can just ask whatever question you have in the comment section and I'm going to provide answers for you, irrespective of whatever country that you are. Now, instead of buying just a single stock, you buy this S&P 500, for instance, which is an index fund, and then by so doing, you will owning a basket of different companies instead of just owning one company. So now that you know what investment is, why you should invest, what stocks are, and how to earn from the stock market, now that takes us to the next one, which is how to start investing. The first thing that you have to do is to find a platform. There are different platforms depending on your locality, depending on your region, depending on your nation. There are different ones. For instance, we have the Vanguard, even the UK, that you can use, of course, for this investment. And then when you're making your choice of this investment, the moment you have registered, you have signed up, the next thing you want to look out for is to ensure that these investment platforms you want to use are licensed. It is very important. It is risky to use an unlicensed one because there are scams everywhere. So you ensure that, one, it is licensed. Secondly, check that the fees are minimal. For beginners, it is best that you go for tax-free accounts. Though there are sometimes limits to how much you can invest in a year. Sometimes it's about $20,000. It all depends. But ensure that, one, these are the things you should look out for when choosing your platform. Also, if you want me to help you in getting these platforms, please drop your country in the comment section and I will help you sort the best platform that you can use for your investment according to your country that is licensed. Now you have to check that, one, they are licensed, two, they are tax-free or have minimal fees, and number three, it should be user friendly. You don't need all that complexity right now. You just need something easy, something that is easy for you to navigate, easy for you to understand, something that once you open it and you log into your account, you can easily buy and sell and do whatever you want to do. Now once your account is established, you have registered your account, you go ahead to fund your account. Once that is done, you make a choice of the stock that you want to buy, click on the buy, and that's it. Make sure to always confirm whatever you are buying from your portfolio. So you check your portfolio and be sure that your stock is there. Over time, you can keep buying at different prices, but trust me, at the end of the day, there's going to be an average cost, and then that way you're able to monitor your increase, you're able to monitor your profits. So why buy a single stock which is more volatile when you can own several baskets of companies at the same time with almost the same value of money? I hope this video was helpful. Please, if you have any questions, whatever you want to ask, please drop it in the comment section. I'll definitely attend to you. Thank you so much for staying till the end. If you're yet to subscribe, please subscribe, like, share, and comment. Thank you so much for watching. See you in my next video. Bye.